Hello everyone, welcome to another portfolio update with UK Investor 2021. This week I deposited another £500 into my Trading212 ISA, which takes me just above the 50% mark for my ISA allowance this year, so I'm well on track to max this out by the end of the tax year. This week I started off around a 9% return and had a nice downswing all the way until the end of the week, finishing at just over 8%. I've added 2 new positions to my portfolio this week, but we'll talk about those at the end because we'll start off by talking about my largest holdings, which are my ETFs. Starting off with the largest holding in my portfolio, which is VUSA, which is currently sat at around 42.6% of the portfolio. As you can see, we are down 0.48% in the week, which isn't great for your largest holding. This has also been my major purchase of the week. I bought about another £400 worth of VUSA shares this week, just before ex-dividends, so I should get an extra few pence in dividends at the end of the month. As you can see, VUSA is trending like just above the 50-day average at the minute, so we're just ticking up nicely, pretty consistently, and I shall just continue to average into this every week or every time I make a deposit. Now, if we go on to my second largest holding, which is Vanguard World, this is sat at just under 15%, which 15% is my target allocation for this, so we're about on track. Down almost 1% this week, which is quite significant, really. It means if VUSA was down around 0.5%, actually this broader ETF has performed worse, despite the fact that it's arguably more diverse, and it's certainly more diverse across more geographic regions. As you can see, there's actually big red candle down to almost below the 50-day moving average, so if this drops below next week and I do make another deposit next week, it's very likely that I'll end up boosting my holding in Vanguard World. Now on to my final ETF, which is EQQQ, which is sat just below 10%, which is my target allocation for this ETF. Pretty chaotic week, as you can see, mad spikes every time the US market opened. Down on the week for 0.7%, which is kind of bad news because the largest individual stocks that I hold in my portfolio are the major constituents in EQQQ, so this generally bodes poorly for my portfolio as a whole, and that's kind of what we're seeing this week. But as we can see, the Nasdaq as a whole is kind of trending upwards quite nicely. There's quite a lot of red candles in the recent weeks, but we're still above the 50-day average, and I think hopefully we'll continue to see this trend upwards. So now we'll look at the individual stocks in my portfolio, starting off with Alphabet, or Google Class C. This is sat at about 10.5% of my portfolio, which is my target allocation for this stock. Slightly down on the week again for Google, at minus 0.4% almost. As you can see from the chart, kind of trading sideways now for like the last 2 weeks, pretty flat. News out of Google this week includes Wells Fargo is going to use Google Cloud for its multi-cloud pivot, whatever that means, but it does mean that Google have now taken on another huge institutional client for cloud, which should hopefully generate them lots and lots of cash in the long run. It's also interesting that Wells Fargo partnered with Microsoft as well, as opposed to Amazon Web Services, which is somewhat upsetting as an Amazon shareholder, but it is what it is. Additionally, Google have also been fined $177 million this week. Seems every week Google's facing another lawsuit and another fine, but I think this is just a cost of Google doing business and maintaining their kind of monopoly, so to speak. $177 million to Google is, it's a hit to the cash, but if it allows them to continue to maintain the market dominance that they're being accused of abusing, then it's well worth the price. So, some good news, some bad news for Google this week. I think we'll probably see it trade pretty sideways until earnings, which are at the end of next month. Moving on, we then have Facebook, and Facebook was down, let's find it, down 3.7% last week. So lots of negative news for Facebook this week. I'm not sure if it's really attributed to the 3.7% decline, but it certainly doesn't help and does provide some kind of continued downward pressure and downward momentum on the stock. First off, Facebook documents show that Instagram is toxic for teens, and most notably for teenage girls, with 1 in 3 girls having body issues which have been made worse by Instagram. Like, this is obviously a bad thing from a moral point of view and a societal point of view. However, insecurity probably helps Facebook sell products and helps advertisers sell products. So whilst this is probably a bad thing, this is kind of a good thing for Facebook as a whole. Now on to other news about Facebook defending their system, which exempts elite tier users, including politicians, celebrities, and I think athletes as well. Apparently this is a big deal for some people. They think Facebook should be a completely fair and equal society and platform for users. And I mean, I can kind of understand the notion, but if you're a massive tech platform like Facebook, at the end of the day, you want to promote users which generate you revenue. And again, I don't really see this as a bad thing, and I'm not really sure why there's so much upset about this. Now on to more news about Facebook changing its business tools following threats to its ad targeting business. This is big news for Facebook, as almost all of their revenue and profits come from advertising. And the recent iOS changes are looking like they're potentially going to hurt this in the short term. However, I think it's going to hurt all other tech companies which rely on advertising. I think Facebook's kind of size and competitive advantage in this space is the fact that they have so many users. Like, they can aggregate data from multiple platforms with billions and billions of users engaging on a daily basis. So I think this is just part of Facebook's long-term plan to kind of restructure their targeted ads business to kind of fit the new environment surrounding iOS. So whilst this is short-term kind of negative news or positive news, depending how you perceive it, I mean, it's good that Facebook are trying to kind of evolve with the recent changes in the iOS environment. So I think this is a good thing. And as a continuation from this, WhatsApp is testing Yellow Pages like feature in WhatsApp business chats. WhatsApp is going to allow users to search for local shops using a new business nearby menu in the chat option with WhatsApp Business. I'm not really sure how much impact this is going to have on Facebook, but it is a good way for Facebook to potentially monetize WhatsApp, because I think at the minute WhatsApp is probably the most underutilized revenue source for Facebook that they own, and it's good to see them starting to kind of push to truly monetize WhatsApp, like within their kind of Facebook family environment. So it'll be interesting to see how much effect this has, and in fact whether or not they can truly monetize it. But at this stage, I think WhatsApp Yellow Pages is kind of superfluous in the context of like Google and Google Maps. I can't see this being a huge thing in this format, but we will have to see. Right, moving on to Amazon. So onto Amazon, as you can see, currently makes up about 9.5% of my portfolio, which is overweight from my current goals of where I would like it to be. I hope long term this is going to sit around 7.5 or 8%, but I did over purchase Amazon before previous earnings, expecting it to kind of ramp and explode up, but that didn't happen. So my strategy has somewhat changed with Amazon. Pretty sideways week, and I mean that's pretty much just the story of Amazon at the minute. Just trades pretty much sideways week in, week out, and has done for the last year and a bit. I don't expect we'll see any real major price movement until after earnings for Amazon, so we'll just have to wait and see. In the news this week, Washington DC are expanding their antitrust suit to include wholesale goods. Again, they're saying Amazon's being anti-competitive by pushing their own products on their platform, which undercuts third-party sellers and kind of pushes them out of business. And then once third-party sellers drop off, Amazon then inflate their prices back up. So they're undercutting competition on their own platform, driving them off, and then basically filling the void which third-party sellers were filling on the platform. Additionally, Amazon have announced this week that they plan to hire another 125,000 employees in the US, which is pretty incredible. And this is on top of the 40,000 corporate and technology employees that they plan on taking on. So Amazon, all in all, are planning to increase their kind of staff base by 165,000, which is just an astonishing number. And on top of this, they're offering an average starting wage of more than $18 per hour and up to $22.50 in some places. And on top of this, they're also offering free college tuition, as previously mentioned in last week's video. And I think this is kind of similar to the antitrust suit that Amazon are basically going to price their competitors like Walmart, etc., out of business because they just purely won't be able to employ staff, because the kind of workers that want to work at Walmart, Target or otherwise, we're just going to go work for Amazon. If Amazon are paying them, maybe 20-30% more an hour and paying for their college, it just doesn't make sense not to work for Amazon. So it'll be interesting to see how Amazon trades over the next few weeks. But like I say, I think it's just going to be very much sideways until earnings, and it would need a very, very good earnings to kind of explode up, I think. So now we'll move on to my next largest holding, which is Coinbase. Coinbase is currently set at around 1.5% of my portfolio, which is my target allocation for it. So we're about where we want to be for this. 1.3% down this week with no major news or impact on the share price. Like, this is mainly driven by crypto fluctuations, and again, this is just my way of tying myself to crypto indirectly. Coinbase have announced this week that they are raising $1.5 billion of funds via a debt offering. I think I did see as well that actually they've managed to raise this already very, very easily, which kind of is encouraging as a Coinbase shareholder. One, that they're able to finance so easily, but two, that they're planning to raise $1.5 billion to kind of improve their balance sheet and improve their kind of offerings. So generally a good news week for Coinbase, but obviously generally tied to the broader crypto market. So it's another down week for Coinbase. Now we'll look at AMD. AMD is also around 1.5% of my portfolio, which is the kind of target amount I have for AMD. AMD is 1.26% down in the last week and is kind of approaching this kind of low buy point that I have set out for AMD. So I think if we cross below this next week, that I'll likely pick up a small percent more in AMD. This week, not a lot of news again for AMD. However, Intel are reportedly cutting their server CPU prices to try and combat the AMD kind of takeover of this space. So this is somewhat bearish for AMD, as they are competing with Intel heavily and stealing market share away from Intel with regards to server CPUs. But it's also bullish as an AMD investor that Intel are having to do this. So it'll be interesting to see if this makes any notable difference with regards to AMD's growth in server processor sales. But I think AMD at the minute are just crushing Intel, and I think they'll continue to do so. So that's pretty much it for AMD this week. And now we'll get on to my two new positions in the portfolio, which are Wisdom Tree S&P 500 3 times daily, or 3USL. I picked up £15 worth of this 3 times daily leveraged ETF, and I have also picked up £15 worth of a 3 times Nasdaq daily ETF. I've bought these as kind of a small experiment slash test into whether or not I actually have the metal to hold leveraged ETFs. Like these aren't intended to be held for more than a single day or days at a time, and have extreme risk when holding for the long term. However, I have seen a lot of analysis recently about an ideally leveraged portfolio perhaps being somewhere between 1.1 to 1.2%, or sorry, 1.1 to 1.2 times leverage to the portfolio as a whole. So I think if I slowly increase my holdings in these and I have the stomach to hold them, that it is quite likely that I'll try and push my overall portfolio to a 1.1 or 1.2 times leverage portfolio overall. These are extremely volatile. They mirror the daily return using credit swaps and whatever else to mirror the daily underlying index. So for this 3 times S&P, as you can see this week, has had huge swings, finishing 2.65% down on the week. It's down in the last month, but over the last year, Trading212 say NANA, but it's had an exceptional run, beating the S&P returns by a factor of more than 3 because we're in a bull run, which means I think this is about a 70% return this year, which is incredible. However, small market changes downwards for any length of time cause these quite rapid drops, so it is exceedingly high risk. But this is just going to be me experimenting, seeing if I have the stomach and the mental fortitude to kind of hold leverage for any kind of term. So it'll be interesting to see how these come on over the next few weeks, and I'm just going to slowly average into these each week as I make overall deposits and investments. So I don't expect that these are going to pass 1% of my portfolio anytime soon. So in summary, this week I deposited another £500 into my ISA, of which I invested a further £412. This included 2 new positions in 3USL and QQQ3, but the main investment was into Vanguard USA. All of my positions this week were down. I have an unrealized loss on the week of 0.89%, or an unrealized loss of £132.46. My projected return this week fell to 14.92% for the end of year, which is the first time in a few weeks that we've dropped below the 15% mark. So hopefully next week this will boost back up to just above 15. That's it for this week, guys. Thanks for watching, and I'll see you next time. Please like, subscribe, and comment down below. Thank you very much.